Hi everyone, hope you're all doing well. Today we're going to do an update on Nike stock after the reported earnings this week, and as well as that, one of the biggest stock market YouTubers out there called Nike stock easy money, and I completely disagree with this statement. So, bit of a video on Nike, bit of a response video. Hope you enjoy it. Hit the like button. Let's get going. So let's talk about Nike stock. Now let's just clarify one thing. Last time I talked about this stock, I have a good UK audience around 80%, but I have about a 20% US audience. So for you guys in the US, I apologize because I saw last time a lot of you were really offended because I said Nike instead of Nike. In the US, obviously you guys call it Nike. Here in the UK, we call it Nike, so I will be going with Nike. Apologies. You can just flinch a little bit every time I say Nike, and unfortunately that's what we're going to go with because there's no Y on the Nike. It's not Nike, it's Nike, unfortunately, from us in the UK. Anyway, let's have a look here. So the stock has had a bad year, down 27% year to date. And really since the highs in 2021, when the stock was $174, there has been a big pullback by 56%. So naturally you're thinking, great brand, Nike, known well all over the place. Half the share price fall, half the market cap fall. It's got to be close to a buying opportunity, right? And that's what we're going to talk about today. 23 times earnings, although the earnings are dropping dramatically at the moment. As you can see here, net income in the latest quarter was down 26%. That PE ratio is actually a little bit inaccurate because if you start using future earnings, that PE is actually starting to rise, and that's also a little bit of a concern about it. Now, for me, when I look at Nike, I have not been a fan for this one for a while. If you've watched my videos on the YouTube channel, I think for the last kind of 12 months, I've been saying I'm not a fan of Nike stock. There's still a lot of work that needs doing in Nike for it to be a successful investment. For me personally, I've been calling Lululemon the stock that is in the fashion space as the one to be picking up. I have been posting about Lululemon for the last kind of 4 or 5 months, as you can see here from this video here, talking about when I started buying Lululemon. And since that time, Lululemon has gone on to do very well. It's outperformed Nike. I'm up around 50% on my Lululemon shares since I bought them. In my opinion, Lululemon was a lot better stock to be buying if you wanted to get into the fashion space. I said it would outperform Nike, and that's what has started to happen with Lululemon. Now, like I said, it's a bit of a response video because I saw one of, if not the biggest stock market YouTuber called Nike Easy Money, and like I said, I'm not a fan of Nike, and I definitely don't think it's anywhere near easy money. And today I'm going to show you why it is not easy money, and hopefully give you guys a little bit of an education around investing and why Lululemon has outperformed Nike and should continue to outperform Nike going forward. So Lululemon did so well because what happened is when all these kind of fashion stocks were dropping as people pull back the spending in 2022, what happened is Lululemon went a lot cheaper. So Lululemon went down to 20 times earnings. Now Lululemon, because it's still growing, actually went all the way down to, I believe it was 16 forward times earnings, which should not happen because when you looked at Lululemon's numbers, they were still very good. The company was still growing like 9% a year. The profit was still growing like 10% a year. So you still had, even though Lululemon was having a bit of a slowdown in the US, it still had major growth drivers in China, which meant the growth was still there. So you're still picking up a company at like 16 forward times earnings that was growing nearly 10% a year, which is actually still not too bad. The problem with Nike is that Nike never went cheap enough. So when you look at Nike at a moment, it's actually because the profit's decreasing on Nike, or declining on Nike. It's actually 28 times forward earnings. So you're actually paying more of a valuation right now on Nike than where it is right now because of the growth declining. And the problem that you had with Nike is that their numbers are absolutely atrocious. And you look at Nike and it's suffering massively. You know, compared to, like we said, Lululemon, that's growing massively. On Holdings, that's growing massively at the moment. Foot Locker is still doing a bit better than Nike. So that's a concern. And the fact you have someone like Foot Locker saying that Nike's our softest brand out there, that's a major concern, because if you're getting singled out as a weak brand, it's that you're majorly underperforming the category, and there's concerns around what is going on with Nike with all that kind of news. Now, in my opinion, the problem with Nike is that obviously they've got a new CEO in, but there's a lot of damage that has already been done to Nike, and that's going to take a long time for Nike to even get close to recovering. You know, you look at someone like a Nike, for example, and they've absolutely killed the brand. They've raised prices to very high levels that's putting the consumer off. The products have been developed to being pretty poor, and it's killed a lot of partnerships. You know, it needs partnerships like Foot Locker and JD Sports because they have been contributing good sales for them. Well, now the problem what Nike had is they basically went, you know what, we want to go direct to consumer. We want to go direct to consumer and we make more profitability. That was the plan under the last management team. Now the problem is that the new management have come in and said, oh, we want to fix our partnerships with Foot Locker and JD Sports, because they realised how bad of an idea that was. And it kind of shows that when you look at someone like a Foot Locker and JD Sports, what's the moat around them if Nike ever moves away? Well, we found out that actually Nike might need Foot Locker and JD Sports more than what we were thinking beforehand. But the problem with a lot of these companies like Foot Locker and JD Sports now is that the damage has kind of been done. So the new CEO in Nike is going, oh, let's fix these partnerships. The problem is that Foot Locker and JD Sports are going, hold on, two years ago you went, actually we're going to cut loads of supply to you and we want to make more money. So Foot Locker and JD Sports are going to be like, yeah, sure, you want to start getting the partnership back together, but the damage has been done, mate. Because we know that in 2 years' time, let's say the Nike brand starts recovering, what happens if they start thinking, let's just pull back a bit of the Foot Locker and JD Sports again and go back to the direct to consumer again and hurt them. So Foot Locker and JD Sports now are going, okay, we've seen you try to do this move once and then you did a U-turn on us. Unfortunately, the damage has been done, mate, because instead of just stocking the likes of Nike now, we're going to give more exposure to Lululemon or On Holding. So if you try to do that trick again on us, we're not going to be affected, because we know you can do that to us and we know you can turn your back on us. So they're good for them guys. Now they're going to be thinking, we're not going to rely on Nike as much, because if you turn the back on us again, you're going to try hurt us again. So even though it's like, oh yeah, we're trying to fix partnerships, unfortunately I think Foot Locker and JD Sports are going to be looking at them now and going, actually, you know what, if you recover in 2 years' time and then try to turn the back on us again, it's too late now, mate. We're going to diverse our revenue streams a lot more. So I think Nike are in a bit of a situation where it's really hurt them. Now, looking at the recent earnings for Nike, they were terrible. There was no way around it. If it wasn't, the stock didn't really go down on the day. I think it shot up a little bit on the after hours, as you can see here, and then gave it all back. And then I think people kind of went, actually, that's a really bad quarter. I think the earnings were terrible. Now, like I said, the thing is that Nike couldn't have a new CEO in, so he kind of played the new CEO card at the moment. And even though it was a horrible quarter, he'll be able to get away with it. He'd probably be able to get away with the next quarter as well. I think it's the quarter after that one where we'll actually start seeing, if it's another bad quarter, the stock will start going down on these ones. So he's got the new CEO card to play at the moment, which will save him for this one and the next one. After that, I think if these numbers keep going on how they are doing, we will start seeing Nike stock going down. Now, this is the situation here, is that the revenue was down 8%. That's very, very poor. The thing is that Nike don't only have to get to break even, they need to go back to growth. And getting back to growth, and the thing is they need to get back to growth of like 8% a year. So it's about a 16% swing from where they are right now, which is way off. If you look at this, is the big concerning thing as well. Nike Direct revenues was down 13%. Wholesale was actually the strongest part of the business, down 3%. And this is where we talk about, the need JD Sports and Foot Locker. The fact that Nike, the direct sales are struggling the most, that's a major concern. That's where you start questioning the brand. You start questioning the brand because the brand has no pricing power. If your direct sales are going down, that to me says you haven't got pricing power. That's your higher profit side of the company is going down. That's you've got to be worried. Gross margins down 100 basis points. Once again, another major concern there. This is the big thing as well, because the direct to consumer, the biggest profit generator for them is going down massively. How they're down 26% on net income, which is a big, massive impact. And that's when we talk about Nike, is because actually when you start looking at how fast the profit's going down, Lululemon was so good because they were still growing. Nike, they're in decline. And because of that, the valuation is actually getting more and more expensive on Nike. And what you're going to have to see Nike do is, they're not only going to have to go back to revenue growth to justify this valuation of 6, 7, 8%, the profit margins are declining. We're going back down to a 10% profit margin. For Nike to do as well as what they need to do, we only don't need to see revenue growth from them. We don't need to see profit growth from them. They need to get back to good profit margins. To get back to where they were, where the stock went to, let's just zoom out a little bit here, $160, $170. To get back to that point, Nike also need to increase the profit margins. And they need to get back to profit margins like 12, 13%. And right now, they haven't got the pricing power. So how are they going to get to 12, 13% profit margins when they haven't got pricing power? And then the other concern is that they're losing market share. They are losing market share. I hear this all the time that Nike is, a great brand, and I think it is. But at the end of the day, it's a fashion brand. Fashion brands are the biggest or weakest moats out there, they can easily be disrupted. You know, we've seen very quickly how Lululemon have taken share off them, On Holdings have taken shares off them. And when you look at the teens aren't buying Nike. They're not buying it, it's losing market share. You start looking at, Lululemon has been doing quite well, but if you start looking at Nike, for example, it lost 510 basis points on market share in athletic footwear. That's a major concern. And if you look at the footwear brand overall, once again, losing market share. So a lot of these teens at the moment are starting to switch to other brands. And the concern is that if they're switching to other brands, you know what happens? The teens start feeding up to the other age categories. If the older categories start seeing that teens are no longer wearing Nike, like, oh, it's uncool to wear Nike, I'm going to have to go wear On Holdings. This spreads up a little bit now. And this is probably one of the major concerns, that teens are falling out of love with Nike. And, you know, there's so many things that they have to improve really to turn around from here. So let's have some quick look at some numbers here. So I put 3-5-7% revenue growth in. Now, getting to 5-7% revenue growth is going to be a big ask from where they're currently at right now. On the mid side and high side, I've also got a 12-13% profit margin, and I've got 20 times earnings. Now, if you look at this, you know, 9% on the downside, 7% on the medium side, 37% on the high side. Nike is okay. There's an upside here. Like, if you buy Nike, I think you'll make money on it. I think you're underperforming the market though. That's the big issue. The only thing that's really going to save Nike is if it really goes back up to like 30 times earnings. So if it goes back up to 30 times earnings, then you start getting 100% upside. But then you start looking at what you're asking for. You're asking Nike to get back up to 7% revenue growth. You're asking Nike to get up to 13% profit margins. You're asking Nike to then go back to trading at premium. I think the market won't put Nike back at 30 times earnings because I think they've seen how much it can be disrupted. I think for Nike to get back up to 30 times earnings is a really big ask. You're asking a lot of Nike here. You're asking the company to really start turning around the performance of this business. And, you know, right now, realistically, if they do get to some form of growth, if the profit margins stay where they are and they stay at 20 times earnings, there's not really much upside. And I look at Nike at the moment, I think there's just no risk to reward here. Like, when you run the numbers here and you look what you're asking them to do, it's a big ask. And there's a lot that needs to get turned around here. And I think, you know, why invest your money in this stock here where if they execute to perfection, yeah, you might get 100% upside on this business. But you're asking really big things here. You know, there's other companies out there that I think will easily outperform Nike. I think you had the likes of Lululemon when they were at 20 times earnings, 16 times earnings, easily outperform the market and Nike. And we've already started to see that happen, for example. I just don't know why you would buy Nike when there's so many risks for it. And even if they execute to perfection, the upside isn't majorly that big. So when you call Nike easy money, I don't think it's easy money. I think you've got to see Nike drop a lot more to come easy money. I think you're talking about Nike where you would have to see it probably drop a good like 20% from here potentially. I mean, if we start talking about a 80 billion market cap from where it is right now, if we look at 80 billion market cap, okay, that's actually not too bad. And you know, if we do put a little bit of metric expansion in there, let's say Nike goes to like 25 times earnings, the market goes, actually, you know what, we are going to put you back up to a bit of a premium. I can justify buying Nike at an 80 billion market cap. So I think if you want to call it easy money, I think you've realistically got to be seeing another 20% drop in it before it kind of comes to that sort of levels. Right now, yeah, there's a lot of things that need turning around, and when I look at the upside, I think there's plenty of stocks that will outperform it, and I don't know why you'd want to go buy this one. Like I said, I think you'll make money on it, but I think there'll be many stocks that outperform it, and I think it will struggle to outperform the market at these sort of levels. I think you need it cheaper, especially when you look at how bad some of these financials are. So yeah, not easy money for me at the moment. It definitely needs to go lower, and like I said, when I was talking about Nike few months ago, I think Lululemon was a stock you should have been buying, and obviously that has performed amazing, and I've made a lot of money on Lululemon, and I hope you guys did as well. Anyway, I hope you enjoyed the video, guys. We're going to try and get one more in before Christmas. Thanks for watching. I'll see you in a bit.